Welcome to Bears in Exile. Today is August 3rd, and it is time for the market overview. We'll be looking at all the usual suspects, like we do every night. And like every night, we're starting off with the Dow. Very interesting day. We had a big, ugly red candle yesterday, continuation candle, and today we have a extremely pretty hammer. Which is very, very nice. It shows that sellers did come in and they were swatted down. So, fantastic. We have had some nibbles on our way down, people feeling for a bottom, and whether or not this is it, we don't know. But certainly, this does look encouraging. Beyond that, short-term moving averages, look at the wobble and the extreme separation. This is ugly. Very ugly. The long-term moving average has collapsed into a flat line and is probably in the process of turning over into a bearish bar, offering resistance should we head back up. Of course, we're still below the 200-day moving average. We are way away from this month's price consensus levels, and we are not too far away from the previous month's lower price consensus level. Beyond that, we have the MACD histogram, MACD clicking down, RSI clicking up, CCI clicking up, and the stochastic clicking up. Notice the 14-day moving average of the RSI moving average, the 14-day moving average of the RSI is still sloping down. What does this tell us? Well, the candle says that we could have a stand here of some sort. We could have a bounce here of some sort. It's not confirmed. We know that the moving averages are not favorable at this moment for continuing just this plummet, because it is all messed up. Absolutely it could, but this is ugly. This is going to need to fix itself at some point. And the rate of descent is extreme. So, what am I thinking? I'm thinking that if we do get a bounce, and I'm hoping that we do, that it will go up a few hundred points. I don't expect this to break out to new highs at this moment, but a uptick and a bubble correction does seem to be in order. Now, why only a bubble correction and not a crazy rally? Well, that's why we have the 14-day moving average. This is a new little trick that I was testing, and is pretty cool. Whenever it is sloping down, you have the stochastic jumping around, and that produces green candles or small pops, but the overlying trend is demonstrated with it sloping down and it being dragged down. Conversely, when it is sloping up, you get nice moves regardless of whatever the stochastic is doing. That is very fast and adds strength or lessens strength to the overall. But so now we have it sloping down. So the stochastic is very low on the daily. But if it were to jump up, go through it, whatever, we would have a nice pop. But as this is still going down, in the end, the price should be dragged down with it. That's the overall thesis for that. Divergences, we have one on the daily CCI. We have one on the daily stochastic. And if we go to the 60-minute, why it does that, you can see that we have one on the CCI. The one that we had forming on the stochastic was destroyed today, as well as we have one on the RSI, and of course we still have one on the MACD histogram. So the 60-minute does point to a possible jump, and that's because of that 14-day RSI moving average. Notice how it is so low. As you can see, it can stay low for a very long time. But if it were to decide that it was the moment for it to start to pick up and it goes up, that would be enough for a jump on the daily, and it would be just enough of a jump to do a bubble corrective move. So I'll be watching that to see if that plays out with the other divergences. Certainly that lends the possibility of that happening, and the candle today also suggests that happening. So not really bullish in the short term, but definitely looking for a jump up, and it'll be really interesting to see if it's able to cleave through the Dow 12K with ease like it did on the way down, or if it'll get stuck there or what. But I would expect it to get through it. Actually, it'd throw a lot of people for a loop, and we certainly have all kinds of shorts to burn at this moment. In the end, they are going to be correct, but I still say that my feeling anyway, and I could be totally wrong, is that maybe around the 12,200 area. If we were to get an uptick today, it would be right about 12,250. So right in that area would be perfect in my book. SPX, more of the same thing. Extreme separation, wobble in the short-term moving averages. Bearish bar is starting to form. We have a gorgeous hammer today. CCI clicking up, no daily divergence. Stochastic clicking up. Notice the 14-day RSI moving average still sloping down, putting a cap on the pop. It doesn't mean that we won't get one. RSI itself clicking up. MACD histogram clicking down. 60-minute looking for divergences. Still have one on CCI. The one on stochastic was destroyed today. RSI moving average very low, which is good. It does say that if it moves up, we will get some sort of a pop. RSI possible divergence was nullified today. Still have one on the histogram. VIX not too good for the VIX. Got a downtick today to add to our other one. Inverse hammer. Downtick giving us a target right just a hair below 22. CCI clicking down. Stochastic clicking down. RSI moving average still pointing up. RSI itself clicking down. Histogram clicking down, and MACD waiting to click down. Divergences. We let's see, what do we have here? This one's real mixed because it had a little bit of a corrective move here. I'm just going to skip this for now, but not exactly sure. That one's real iffy to me, so I'm going to leave that one alone. XOI, oil. When oil is bullish, the market is bullish. Hammer, very pretty hammer. We don't have much in the way of wobble. We do have excessive separation. We do have a flat line for the long-term moving averages. CCI extremely low. Stochastic clicking up. RSI still clicking down. Histogram and MACD clicking down. RSI moving average, of course, also sloping down, just like the major indexes. TNA, another gorgeous hammer. Excessive separation and wobble in the short-term moving averages. Bullish bar is forming. We have a long ways to go to hit the 200-day moving average, which is fine because TNA moves much faster than the major indexes. Divergence on the stochastic clicking up. Divergence on the, I'm sorry, that was the CCI. Divergence on CCI, divergence on stochastic, both clicking up. RSI clicking up. MACD histogram still clicking down, as well as the RSI moving average. Putting a possible cap on a bounce should we get one. Divergences in the 60-minute time period. Have one on the CCI. The one for the stochastic was broken today. We do not have one on the RSI. We do have one on the histogram. For the most part, everything's starting to click up except for the RSI. So notice the RSI moving average very low. If it goes up, we'll have some sort of a move up in the short term. UUP, this is very weird. We're witnessing some sort of weird decoupling between the dollar and the euro in the market, and we're waiting to see how it reestablishes itself, if it will be in parallel or inverse as it was previously. We have a star today, CCI clicking down, stochastic trying to figure out what to do with itself, slight click down, RSI moving average leveling out, RSI itself clicking down, and histogram MACD slight click up. So the currencies at the moment do not mean too much. We have to have correlation reestablished for them to mean anything, and with that we have FXE, which is a hammer, and we're just waiting for these to reestablish themselves to have meaning. Gold, our second VIX, red bar. It is not quite a spinning top, but it does show that gold is pricey. We do not have a downtick. We do have perhaps a little bit of excessive separation, but not too critical. We do not have wobble. It is fairly uniform. Bullish bar, very nice. If anything, I would think that a retest of the upper price consensus level should happen over the next few days. But we'll see. We're going to have news on jobs tomorrow. We're going to have news on jobs Friday. And at this point, even if the news is bad, that could be perceived as good because QE3 is on the way. Then again, it could be perceived as bad because the world is coming to an end, and we have to witness how the market responds to it, because at this point it can't be gauged. Beyond that, CCI massively high, stochastic and overbought area, RSI moving average very high. It will take some time for it to turn over, so CCI will do its thing, and we'll see what the moving average for the RSI does. That will be very important. RSI itself still in overbought territory. MACD histogram barely getting a click up. MACD histogram still pointing up. Just interesting to me that our second VIX kind of goes along with our regular VIX, in that regular VIX is a possible reversal candle, and we have a negative candle on gold, confirming each other in a odd sort of way. Now silver did not do the same thing. It had the exact opposite of gold. Same candle, but green, and getting above its upper price consensus level. CCI very high, RSI moving average and stochastic clicking up, RSI clicking up, and MACD histogram neutral, MACD itself still positive. Doesn't look too bad. We do not have wobble or excessive separation in short-term moving averages. The bullish bar is still expanding. Not bad at all for silver, and I don't know exactly what the reason for that is. People looking safety at a cheaper price. I don't have an explanation for that, but I'm sure there's a multitude of theories, so just fill in the blank. And there you have it. There is the market overview for tonight. Tomorrow will be very interesting. Very curious to see if we have a close above this hammer confirming it, or if sellers rush back in and say the world is ending and everyone's going to be unemployed with the jobs data. We're going to have to wait and see. But if there is a time for it to do something, tomorrow is a beautiful day for it to do it. Have a nice night. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.